Welcome to Mulready Minutes with Oklahoma Insurance Commissioner Glenn Mulready. This is a podcast about insurance for insurance folks, risk managers, and business leaders. We'll dive deep and look at what is and isn't working, talk to leaders in the industry, and keep you informed on what's happening in Oklahoma and around the country.
Hi, welcome to another Mulready Minute podcast. I'm Oklahoma Insurance Commissioner Glenn Mulready. Today we have a special guest who happens to be from out of state, and we captured her while she was here for another event and to take advantage of that. So pleased to welcome today Carolyn Fahey. Carolyn is the Executive Director of AIRROC. And starters, AIRROC acronym, what is AIRROC?
So it's the Association of Insurance and Reinsurance Runoff Companies. It's a bit of a mouthful, which is why we use AIRROC.
One more time.
It's a little snappier. The Association of Insurance and Reinsurance Runoff Companies.
I know what it is, but I just thought just for fun for whoever's watching might get a kick out of that. So let me quickly read Carolyn's bio for you. As I said, Executive Director of AIRROC. She represents AIRROC on the U.S. runoff industry in this role, collaborating with AIRROC Board of Directors to define and implement the association's strategic direction. Carolyn oversees all AIRROC's operations and is a well-known speaker and author on the legacy sector, which brought her to Oklahoma for the Society of Financial Examiners National Conference, which we hosted here in Oklahoma City this week, just ended yesterday at noon, right?
Yep,
so
exactly.
Thank you for sticking around a little bit extra.
Oh, absolutely.
To be with us. Outside of her professional abilities, Carolyn managed her daughter's travel soccer team and lives with her husband and daughter in Woodbridge, Virginia. Glad to have you in Oklahoma.
Thank you so much. I really appreciate being here.
Okay, so I thought we'd just start with sort of level set baseline. What is runoff? What is legacy? Those terms, even as we mentioned in our conversation last night, the average person doesn't know what that means, and even a lot of people in the insurance business may not know what that means. So talk about what that is.
Well, it's not just something that comes down from the mountains in rain and water. I will say that. So, in the insurance context, the best way to really define it, and the most simple way, is to say that today's runoff is yesterday's underwriting. Any insurance company is going to have a line of business or different blocks of business for any reason that they've decided to stop writing. So it's really called discontinued business. There could be a lot of reasons.
That's a good way to put that in plain language, right? Discontinued business.
Discontinued business. And there's a lot of reasons an insurance company might discontinue business. It might be it's not a profitable line. They figure out it's not really their forte, kind of their best niche, that they have expertise other places a little bit better. There's a bunch of different reasons why any company might decide to do that. So the legacy sector likes to take that business away from companies that don't really have a reason for it anymore. It frees up capital. It allows them to write new business. Kind of a good example would be like cyber, okay? So the cyber landscape is always changing. So a company might want to get more into writing a cyber landscape that they haven't been able to do before. So they might find something older that they've written that they've held on to, like something that's called a long tail line, like asbestos is a really good example, that they're really done with it. They know it's a high risk. They don't want to continue to cover it. So they stop writing new business in that area, and they might free up the capital to go to something like cyber.
Yeah.
And respond to the consumer, really. Yeah,
we'll talk about IBT later, but the whole reason that we here in Oklahoma moved forward with a solution was because of that needed a solution and an opportunity for companies to sell off a book of business. They haven't written a policy in maybe 30 years. It's not their specialty. They can hand that off to someone who it is their specialty and redeploy their assets elsewhere. So great business tool.
Right, it really is, and it's kind of a strategic portfolio management. I mean, insurance is obviously financial services.
Yeah.
So financial services sector needs to be able to manage that capital strategically to make sure that they can do what the insurance industry is designed to do and write the risks and support the consumer.
So in the runoff legacy sector, tell me about what markets or sectors that involves. Is it just property and casualty? Is it life, or what do you see engaged in that?
So it is property, casualty, and life and health. AIRROC really focuses on property casualty. As you can imagine, the risks are very different between like a life and health book, like long-term care is an example that might be something that a company doesn't want to write anymore. but that's really different than a property risk.
Mm-hmm.
So, really the AIRROC, some of the AIRROC companies, members do have life and health, but we primarily focus on property.
And on the P&C, could you narrow it down to a lot of that is typically long tail liability stuff that they're having to carry on their books for a long time?
Yeah. Well, it kind of depends. You will return to the definition of runoff. And that can be anything that's like 5 years old that a company decides they don't want to write anymore, or it could be decades old. So, like you said, like long tail liabilities, workers' compensation is something that's often very long tail. Asbestos, I mentioned, is something that's very long tail. So, and long tail, I guess, right, those are claims. Policies are written many years ago, and it could take a lot of years for claims to actually develop. And the insurance companies have to keep reserves to pay those claims.
Yeah. So what about the size of that market? And I mean, not just the size, but even, I don't know, look back 5 years. Is that size of that market growing? Is it shrinking? What does that look like?
It's just a different focus, I think, for a lot of companies. We see it growing over the years, and they also are like learning more about runoff. It's a great capital deployment tool.
Yeah.
So the market is growing. It's actually, we have a survey, PwC does a survey in conjunction with AIRROC, and we have a UK counterpart called IRLA, which stands for the Insurance and Reinsurance Legacy Association. The two organizations are not related, but they do the same thing we do, across the pond. You've actually attended one of their events with me and spoke at one point.
Spoke at their conference.
You did. So it's actually the estimated liabilities as of 2024. They just came out with a new survey this year, are just over $1 trillion.
Wow.
And about 50% of that is actually in the U.S. So those are liabilities that any particular company across the board has basically discontinued and put into runoff.
Yeah.
So those are transactable liabilities.
It's a really good segue.
Yep.
The market, $1 trillion, and half of that, if I heard you right, half of that in the U.S. U.S. really has not had a solution for that, a business solution, as we talked about. Whereas across the pond,
right,
they have had Part 7 transfers that they've been doing for 20 years.
Right.
And so talk about that some of sort of that, what's happening in the U.S., not to toot our horn, but we will. Oklahoma, passed legislation and have really sort of been, on the tip of the spear of that, pioneering insurance business transfers. We've had a number of states now follow and pass legislation of their own, which is exciting to see because, again, it is a business solution for companies. So talk about the U.S. market, talk about IBTs generally, and then maybe the different states and what you've seen, how that's evolved.
Okay. So
that was a lot, but
yeah, let's just dissect that. So I guess, insurance business transfers or IBTs in general. So as I mentioned, there's a lot of transactions that happen in the legacy market. That's the big thing. It's a business-to-business level. Let's just say that, let's say Mulready Minutes Insurer had a block of business that you decided to discontinue for some reason. And, the Carolyn Fahey legacy acquirer kind of said, okay, well, let's talk about this, right? Let's figure out how we can work this out. I'm going to take those liabilities away from you. We're going to come up with some way that, whatever payment is going to happen because it's an asset. Premium's been paid to the insurance, right? So it's an asset. And so we're going to come up with sort of our deal. There's a lot of different types of transactions that happen in the legacy market. The toolkit. IBT is one really important thing, especially in the worldwide toolkit. It's always been happening in the UK for a long time, like you mentioned, Part 7 transfers. There's been 327 Part 7 transfers since 2002. And that is it's a UK-based statute. It's a statutory mechanism by which these companies can do these types of exchanges of the liabilities. There hasn't been anything like that in the U.S. until Oklahoma.
In which we modeled ours 100% after Part 7 transfers.
After Part 7 transfers. So I guess you guys are, 2018? Mm-hmm. And there was only one prior, which was Rhode Island, and theirs was in 2015, but theirs is a little bit narrower statute than, the Oklahoma one. So, you know what? It really was the fact that it's a very mature market. So AIRROC's 20. AIRROC's almost 20. IRLA, that I mentioned earlier, is 30. So it just gives you an idea of sort of the legacy sector. It's a little bit more mature market in the UK. So it was time for the U.S. to start to get on board with having some of the additional tools. And companies had been doing that. U.S. companies had been familiar with doing that in the U.K. So they wanted something similar here. In fact, didn't companies come to you and basically say, let's try to figure this out?
That have been doing it over there for years and has worked well. And really without any bad examples or problems from that, it's worked well. So they were looking for that same solution here. And I know for me as a legislator, as the House author on that bill, it just made business sense to me. It was just a business response for me on that. So
yeah. So what else was that? Was there anything else in the
other markets, the evolution of IBT here in the U.S., what you've seen since Oklahoma?
Yeah. So so we've got 5 so far. There's 5 states here in the U.S. that have taken up, the IBT. Now, the Rhode Island was first, so really 3 others since Oklahoma did it, which are Arkansas, Georgia, and Illinois. And we've seen, it's been really interesting, and you've been really involved in this. The NAIC, the National Association of Insurance Commissioners, has also sort of, it's brought the issue more to light, and they're paying more attention sort of to runoff and how it does underpin the rest of what they're doing and how it could possibly help, the insurance consumer. So they have the Restructuring Mechanisms Working Group, which I know you're intimately involved in, which is done some work to help come up with some NAIC standards around that as well.
We might mention, we haven't talked all about corporate divisions, but it's another aspect of your space. And so maybe talk about that and some of the states that are doing corporate divisions as well.
Yeah,
it's similar.
It is similar. Similar. So a corporate division, the best way to explain it would be it's almost like a reverse merger. So, when a company can decide, through yet again a structure where they can put things back together into sort of, one entity. Whereas in IBT, it's slightly different because a new entity is formed. And obviously there's a lot of technicalities that go around it. I mean, one of the things that AIRROC has now on our website is a restructuring resources section of our website. So hopefully we can put the link or something like that up as part of this, but it's going to be an ongoing source of information. We've got the Oklahoma statutes. We've got information, about articles and how different things work. And we'll add recordings and different PowerPoints and presentations that we've done. So the idea is that it's hopefully be a really good resource for people to find more information.
I might jump in just to give some specifics to anyone watching on IBT and really at a high level. But basically what it involves is a company, a domestic of Oklahoma, for the Oklahoma statute, a domestic of Oklahoma doing a transaction with a company from another state. We bring in an independent expert, right? They recommend a couple, and then we Oklahoma, we pick one who typically is an actuary, doesn't have to be, but typically is, who reviews that transaction to make sure after that transaction, the policyholders aren't materially adversely impacted. So they're watching out for them. If that gets submitted to us, if we approve it, and the transferring regulator, commissioner, okays it, it then goes on to district court here in Oklahoma. And so it then goes before a judge with that same sort of standard. Our policyholders are going to be materially adversely impacted. And once approved by the judge, that's what brings finality to the transaction, and then novates those policies over to the new company. So in a nutshell, that's how the transaction works. We've been able to do a few transactions here. We have a couple of others in the works here. So it's getting some momentum slowly, but there's certainly a market out there. And I've often said when I've spoken publicly that there's still a lot of companies, a lot of people standing on the edge of the pool. They want to jump in, but they want to make sure the first few people jumped in didn't drown or something, and that everything went well. So I think there's still, I still see.
And they're all still alive. Nobody's drowned.
No, not at all. But I do kind of hear that sentimentality as we talk about this in that space. So let's talk, as we're kind of closing out a little bit here, AIRROC and that space. I'm sure nobody woke up, yesterday morning as a senior in high school and said, I want to go into the runoff space in the insurance world. But I know you guys do have a young professionals group, or I'm butchering the name, but let's talk about that.
So we have a next gen council. So we've got 9 individuals on. In essence, they're like a board where they are coming up with new initiatives and looking at ways to get sort of the next generation involved in not only AIRROC, but the insurance space in general. I mean, I don't know. It's, there's an interesting talent gap, I think, for everybody now, and particularly in legacy, because one of the things with legacy, we go back to talking about like the long tail lines and some of that stuff again. There's really a lot of institutional memory and people who over the years have handled these things. But, they're going to retire at some point, probably sooner rather than later, a lot of them. And so you need to make sure that you're bringing in young people who are interested in insurance and interested in doing something different. And, it's really interesting. One of the things with legacy is that there's so many different opportunities that are in the legacy space. The insurance sector as a whole, I think, has a really difficult time recruiting young people. But it's even harder in legacy because of the stigma. People think, oh, runoff, legacy, those companies they're dead and dying on the vine. They're going away really soon. Why would I start my career out in a space that there's not longevity? And, as I mentioned before, AIRROC is 20, Erla is 30. This is not a sector that's going away anytime soon. It's actually growing, creative, it's vibrant. There's just a lot of different opportunities for somebody who is new to the sector, really to have exposure, I think, to a lot of senior people.
Yeah.
So, definitely. We also have a scholarship. We like to try to get interns involved. We have a scholarship that we do every year. So application is open now, So, I mean, it's a really good way to kind of get exposure to it.
You make a great point that we haven't touched on, and that's sort of that perception that, runoff, they're going out of business, right, or the company's in trouble, which is not the case at all. No. I mean, certainly it could be, but it just is not normally the case. It's just a segment of their business, of their company, that they just are no longer focused on and no longer writing. It's that simple. Right?
Exactly.
Yeah.
Exactly. And I mean, you look at AIRROC, the AIRROC membership, for example, which we really didn't touch on. We have 75 companies. It's a corporate level membership. So, like Oklahoma is a member, for example. When Oklahoma is a member, anybody from Oklahoma can come and participate. In a lot of our, we do things virtually, we do things in person. There's a lot of, meetings. You've attended and spoken at numerous meetings. And the way that the membership is structured, once a company's a member, you can send as many people as you want off into those for no additional charge. So there's just really a lot of opportunities. And the members are, insurance companies, reinsurance companies, your brokers, your third-party administrators, TPAs. Also, your legacy acquirers, which are the ones that are actually taking, the discontinued blocks. And of course, insurance departments can be involved as well, as law firms and consulting firms and actuarial firms. So, it's a very diverse space in the sense that there's a lot of different types of companies involved that are all really an important part of that.
You mentioned your meetings. I'm just going from memory. Sorry, I don't have the details, but as I recall, you have a spring meeting in March, and then you have a fall networking meeting. But give a little specifics, if you can, on your annual meetings that you have.
Yeah, so we do 6 or 8 a year. Most of them are in New York. We have a couple that we consider our membership meetings. They're 2-day meetings. One day is just very much open time. Like, we put the attendee lists on the website in advance. So when you attend, you know who's going to be there, and you can reach out and say, okay, let's set up a time. We're all going to be at AIRROC instead of traveling all over.
Some speed dating.
Right, exactly. That's really what it is. Instead of traveling all over, you're able to see a lot of people in that period of time because, the transactions that we mentioned earlier are complex. They take time. It's not like you just call somebody up and say, okay, let's do this tomorrow. There's a lot that goes back and forth in it.
Yeah.
So, when they know they're going to see people at AIRROC, they really do. They set up meetings. And we also do a lot of education.
Yeah.
Not only things like this, or like you mentioned, I spoke at Sophie yesterday. I speak frequently in front of captive groups, across the pond, UK groups, helping them understand the U.S. regulatory space. But we do just general, a lot of education about industry issues, emerging claims, new legal topics, all sorts of things like that, and often offer CLE as well. So it's like another perk if your attorneys need credit, they can get it at AIRROC.
Yeah. So in closing, let's get your web address out there. I don't know if you know the restructuring one or not, but at least the general web address, and how they can reach out and learn a little more about AIRROC.
Yeah, it's just www.airroc.org.
AIRROC.org.
.org, because we're a nonprofit.
Yep.
Yeah, I don't think I mentioned that.
Yeah. Good. I think that sort of wraps up our conversation on AIRROC and Runoff and Legacy. Carolyn, thank you for being with us and helping educate whoever tunes in.
I enjoyed it.
Okay.
All right.
Bye.
Thanks so much.
If you found this episode informative, please subscribe and share with your colleagues. Visit oid.ok.gov/podcast. Let us know what topics you would like to hear about on this podcast. Until next time, take care from the Oklahoma Insurance Department.